Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky, Vancouver-based realtor, online at stevesaretsky.com. Welcome back to the show, Steve.
Always a pleasure to be on.
Steve, in the January edition of the Saretsky Report, you discussed the stats for the Vancouver housing market. How do the stats look, and are they based on the average, median, or benchmark price?
We actually, in our report, we like to sort of include all three metrics just because they will all paint a slightly different picture, and I think that's the problem is, your average consumer that isn't studying a housing market on a daily basis can get confused basically by the reporting standards. So, what we're seeing right now is a significant drop-off in home prices across all segments. So, for January, just for simplicity's sake, I'll just use the Greater Vancouver housing market, using the home price index, which is kind of what the media reports on, but is really ultimately a lagging indicator just on the way to collect the data. And, it's basically a model that's used to smooth out fluctuations in home prices. So again, it was sort of a lagging indicator, but detached home prices year over year showed a 9.1% decline year over year, and then condos, I think it only showed 1.7% year over year decline. But what's important to distinguish is that the benchmark has actually declined 6.6% in the past 6 months. So effectively, you have condos, which everyone was saying wouldn't drop or couldn't drop, and the stress test was causing condo prices to go up. I think that myth has clearly been debunked, and what we're seeing now is condo prices declining by 1% on a monthly basis. So again, to your average consumer that's looking at the market, as I always say, you won't notice a 1% decline on a monthly basis. Nobody's going to notice 1% decline, but what happens is all of a sudden you reevaluate the situation 12 months out, and I think most people can see when prices are down 12%. So that's why I think home prices, when they're declining, can actually be quite deceiving, or deceptive for that matter, just because it's such a slow moving market. The declines are so small. Sellers are always holding out. But, when you start looking from like a 1 year period out, it's clear that home prices are in a declining mode.
Are sales down?
So it's 10-year low for detached home sales, 10-year low for condo sales. So that's the kind of territory we're in. I think, City of Vancouver, in my opinion, seems to be leading the market. So what we're seeing is the detached sales for January came in at the fewest sales that I have on record, which dates back to sort of early 1990s. But it seems to me like they're basically bottoming. I mean, when you have basically a 30-year low essentially in home sales for the detached housing market, they really can't get much lower. And so what's going to happen most likely is that you're going to see prices probably accelerate downwards, and that will probably entice a few more buyers to jump back into the market. So you should see sales likely move forward a little bit. And then for condos, it's like they took a huge drop because they were the kind of the resilient part of the market last year. So this year I think they're down about 40% or so in January year over year.
If sales are low, are people leaving the real estate industry?
I think you're going to start to see that. Per the official from the BC Real Estate Council, they're not really reporting much of a decline. I think it's like a couple hundred agents out of 14,000 in Greater Vancouver. So they haven't really recorded any yet, but I would imagine I think we're in a territory right now where with the stress tests and with the global economic backdrop, I think you're in for a couple of years here of really sluggish home sales. And so I'd imagine that over time we'll probably see quite a few realtors drop out of the industry. Probably the same for mortgage brokers as well.
We'll have more with Steve Saretsky right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Steve Saretsky. Steve, when real estate markets bottom, do sales start to pick up?
Yes, it's generally what we see is, again, just sort of studying other housing markets and how they've reacted to significant downturns. Is generally you reach a point where, sales dry up. There's a sort of a liquidity squeeze, so to speak. And the only way to get volumes to increase is by lowering the prices. And so that generally takes a lot longer time for sellers to have a mentality or psychological shift to become more aware, cognizant that the market peak has passed. It takes months of frustration for them to begin to adjust those expectations. And then, so basically there's that gap between what buyers are willing to pay and what sellers want for their place. So that basically creates, a prolonged period of really weak sales volumes, and then what you start to see is the prices slowly start to come down, and it starts to reach a point where you sort of get like a clearance rate, and then the price or the sales volumes start to accelerate, but ultimately the prices are still moving downwards. That's generally how these things play out.
Are the sales right now basically people who need to buy a home, folks say who've just moved here from someplace else?
I have quite a few clients that have moved here recently that are actually taking sort of a more of a wait and see approach. Coming to Vancouver, they don't really know the area as well, particularly when for the most part they're reading headlines, and the headlines are suggesting that real estate is decade low in home sales. So, I think that for my clients anyways, they take a lot of a wait and see approach. I think that what we're seeing, people that are active in the market, that are actually still making transactions, are people that already have equity built into the market. So maybe they're moving from a condo to a townhouse, or from a townhouse to a house. And so it's kind of like basically like a trade up, or sometimes even for a downsizer, it's a trade down. But that's what we're seeing right now.
We'll have more with Steve Saretsky right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX, and on the OTCQB symbol PWWBF, and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, do you know a lot of people who bought a property without selling their current one and are stuck supporting two mortgages?
Yeah, you certainly hear stories about it. I think people are becoming much more cautious now. What we're seeing is a lot of offers subject to sale, specifically, for detached homes. Like if somebody has to sell a detached house, a lot of those offers now are coming in subject to sale. And, again, when you have in the city of Vancouver, a 30-year low in single-family sales, what happens is, you can't sell that house, and it ends up killing, 2 or 3 deals all at one time, right? So it's kind of a bit of a domino effect. But yeah, you certainly seeing a little bit more stress, I think, in the real estate market. I think in the foreclosure space, I would say the numbers are still extremely low, but we are starting to see more court-ordered sales, people getting into difficulties. There's always that old adage that I hear. I think it's one of the most common myths in housing markets is that, well, there's so much equity that people won't sell. But what people don't understand is generally in a foreclosure situation, it's never really a equity problem. It's more so a cash flow problem. A lot of times maybe people getting laid off or they can't service their interest payments. And so it's almost always a cash flow problem, not an equity problem. So, I've seen cases recently, this is, not by any stretch the norm or, a widespread issue, but you'll see people that bought homes in 2000 or 2002, 2003 that have clearly built in a lot of equity and then are somehow, have 2 mortgages on their home and are in the foreclosure process, despite obviously having all that equity. So I don't know how some people get themselves into that position, but it definitely happens.
Does the media play a role in the psychology of the real estate market?
Yeah, I think it plays a huge role. I think it's similar to any financial market. I think it's, it's all sentiment based. So one of my favorite analogies, and as I wrote in my report for January, was comparing 2 articles from the Financial Times. One was dated one was dated February 2016, and the other one was dated February 2019. So February 2016, the article headline says, Vancouver home sales set new record, prices continue to rise. So you can imagine the sentiment that would weigh on people. And that was really what we saw was people rushing to get into the market because they're reading these headlines saying, oh my gosh, record sales, prices are rising, I need to get in. Now what we saw in February 2019 was from the same, newspaper, the Financial Times. The headline showed Vancouver home sales at 10-year low, slowest January in a decade. So, again, I think that's why people right now, a lot of it are on the sidelines and are waiting for prices to continue to come down. That's just the sentiment right now.
When the Vancouver detached market topped in the spring of 2016, where was the media reporting on this milestone event?
I think that the media is really sort of a lagging indicator. So generally there's kind of that old, thesis in the finance world that, the smart money is kind of a first mover and they're in there before the news headlines, before it becomes sort of, mainstream consensus, that big money is in there making plays because they sort of see it before everybody else. And then generally as the media begins reporting on it, that's a lot of times when sort of the smarter money will move out of the market, and then you sort of have the latecomers, joining the party sort of near the top of the market cycle. So, and that was kind of what we saw really with the detached housing market sort of peaking out in the spring of 2016. They really have been reporting on the declines in the detached housing markets, really up until about 6 months ago.
When the market psychology of the masses turns negative, how hard is it to reverse that?
It can generally be pretty difficult, at least in most financial markets. Obviously Vancouver's been extremely resilient, 20 years of a housing bull market. It's somehow managed to, get through the 2008, 2009 financial crisis despite a lot of negative headlines that, most people, I think, were right to assume that would have brought down the housing market here. But, there's a multitude of factors behind that, obviously. But, so I think it's going to be interesting to watch moving forward. But I certainly think that the news headlines are quite negative right now. I think they're probably going to continue to be more negative just on the way that the real estate board reports and aggregates the data. That I think, again, they're still sort of behind the 8 ball. They're still lagging. And so I think like what happens with this home price benchmark, as an example, is the price declines for the next several months are pretty much already baked in. And so I think you'll see the media, continue to report on, home price declines.
Steve, thank you so much for chatting with us.
My pleasure.
My guest has been Steve Saretsky, a Vancouver-based realtor, online at stevesaretsky.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or for our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.